Hey everyone, hopefully you're having a great day. My name's Andy, my channel's Finding Value, and what I'm doing here is I'm trying to look for correlations in the markets to find undervalued investments, and that's where I like to invest. So if that interests you, subscribe to the channel, give me a thumbs up for the content, and this content is what I call stock analysis. What you're going to do is you're going to look at my strategy and approach to finding stocks and what I look at. So I'm going to go through and step everyone through what I look at for finding a sector and then eventually finding a stock. So if I knew nothing about the market, what would my approach be? And this is my approach. I'm going to show you exactly what it is. So in this stock analysis, I'm going to dive in. So I'm going to describe my approach to finding a stock and analyzing it from a big picture perspective all the way down into the stock. Fundamental analysis doesn't work well with commodities. Keep that in mind. Buy when the fundamentals look worst, and you sell them when they look best. So it's kind of backwards. And you need a way to objectively see what the markets think, and that's from a technical analysis viewpoint is what I'm looking at there. So I'm not doing this from my opinion. I'm not doing this from saying this has a great fundamentals from a company perspective on a balance sheet, because remember, commodity companies do not set their own prices. The market sets the prices. They are at the whim of the market. And fundamentals look worst when the prices are the worst. So keep that in mind. So first, I look at real estate. That is where I start. I look at market conditions in real estate. I identify the real estate cycle we are in, and I'm going to do that with you in this presentation. Are we in there's four phases in real estate. The first one, we'll start with the supply phase, recession phase, recovery phase, and an expansion phase. And depending on where we are in those phases is going to direct you to which investment you should be in. And I'm going to show you that in the next slide, which investment I think is good given the phase that you're in for real estate. I think that real estate sets the tone of where we should be invested. And the reason I think that is because I think real estate is what basically lets inflation, it's the origin of inflation. And the reason it's the origin is because when you build new homes in an expansion phase, it is inflationary because new homes have new loans against those homes, which expands the money supply in a fractional reserve lending system. And that lending is the largest percentage of lending for a commercial bank. It sets interest rates. Real estate does, because when you have inflation, it creates a real negative rate. And what that does is it triggers people in bonds to sell their bonds, increasing the interest rate. So that is the demand and supply of loaning, and it also affects the treasury bond. This determines where you should be looking and expending your precious time looking for investments. So I'm going to go over the real estate cycle right here. It's very simple. We've got a recovery phase, an expansion phase, a hypersupply phase, and a recession phase. So what we do is we can see this looking at housing starts, and I'll do that at the next slide. But looking at the different phases, and the reason I have this here is I want to kind of go over what I would prefer to be in terms of investments. In the recovery phase, it's a low inflation phase over here because the real estate market is recovering from an oversupplied phase. The hypersupply phase, they built too many homes and it's recovering. So what you're going to see is you're going to see low inflation. You're not going to see a lot of new homes being built. That is great for stocks, for stock type of investments. Think of companies that are technology, that are just anything stock related. Now, when you go into an expansion phase goes from recovery to expansion, and this means that we're going to be increasing inflation over this time frame. More new homes are going to be built, more new loans are going to be put against those homes, increasing the inflation. If you're in an increasing inflation environment, commodities, real estate, and precious metals are the spot to be, in my opinion. And eventually, when we build too many homes and the inflation starts to slow down, the inventory gets large home prices start to pull back, we go into a hyper supply phase where you'd like to rotate your money out of these inflation protection more to a deflation protection stance where bonds and cash would be good before you hit the recession phase. That's where you want to be, because when you hit a recession phase, it is deflationary and bonds and cash will do quite well when you have the interest rates go down. And when interest rates go down, that means bond prices, those that you purchased with higher interest rates, will go up in value. And that's how it works. So this is the housing starts. What I did is I labeled these with different color trend lines here, like these lines. Green is an expansion phase, orange is a recovery phase, and red I combined into a hypersupply or recession phase. So red is recession, orange is recovery, green is a expansion phase. And you can see the cycle here, the real estate cycle up and down. Now, what you notice is we've got these green circles here. We've got 3 of them. And what that is showing is that's the commodity to stock ratio. The green is when it's super cheap down here. So we've got 3 cheap ones and 3 sell signals up here. I overlaid the green circles where we have buy signals on real estate and on the ratio. So real estate, we're in an expansion phase on every single one of these green ratios. It's signaling that we have inflationary periods and that commodities are cheap in relationship to stocks. So this is signaling that we should be investing in commodities because commodities are cheap in relationship to other assets, in relationship to stocks right here. And when it's cheap and we have the market conditions aligned like we have right here going into an expansion phase, I think this is an incredible opportunity to be looking at commodities for investment. And the reason they're incredible is, 1, they're cheap, and 2, we have inflation coming from the housing starts. And housing starts, remember, new loan against new house, inflationary. So everything is set up for an expansion phase, which is structural in nature and is driven by demographics. And we've got the setup all right here. So that is a positive. Now, looking at the real-time price of the CRB index to the Dow, we are way down here in no man's land. We had a bottom in COVID, which pushed it even lower, because I think we were going to break out here. COVID pushed it lower, and then we've got this sideways action with higher lows coming up. We broke through this downtrend line. We're back testing right now. Perfect. We've got cheap as heck CRB index in relationship to stocks, and we're doing a back test. Remember what I like doing. I like buying the back tests. So we've got that in our favor. We've got the downtrend line here. This is just in price. This is the CRB index in relationship to price, priced in dollars. And we came all the way up. We hit our head on this trend line. And this is what we're watching. We're watching for this to come back down, or if we're going to come back up in a little U shape and break through it. What pushes the CRB index? That's the question, right? The dollar does. The dollar pushes this index up and down. And what I think is going to happen is we're going to see a weakening dollar that's going to push the CRB index up. Why do I think that? Remember the housing starts. That is where inflation comes from. This is what it's tied to, the dollar. That's where I think it's coming from. So that's what the current state is right now for the CRB index. We want to see a weakening dollar. And right now we have a strengthening dollar. Is that good? Yes, because you can buy more. Is it good for prices going up? Not yet. Not yet. We have to see the dollar weaken. Now, I'm just going to do another technical analysis and why I think it's important. I know some people, they had some questions, and I'm going to tie this in because we're doing a lot of technical analysis here. It allows you to see what the market thinks. This is just what the market thinks. This isn't my opinion. It's what the market's telling us. It allows you to see trends. It provides you with historical data. It shows us patterns. Ratio shows us outperformance when charted, and it shows us money flows. It shows that money is flowing into sectors when ratios are changing. It shows bottoms and tops and accumulation periods. My question to everyone that's listening, What are some other things that technical analysis tells us? Put it in the comment section. Love to hear your opinions on it. Now, I'm going to keep going into technical analysis here because we just looked at a bunch of technical analysis. We looked at a bunch of trends. We looked at a bunch of charts that I just proposed. When looked at from the perspective of a big picture view, you can gain perspective on the investments. You can see how they're interacting with each other and what they're doing. You want to look at many companies in a sector to gain a better vantage point. You want to get a better vantage point. You want to be able to see things and see how they're moving. Sometimes use ETFs to get a good overview of the sector. That's what we're kind of doing here. We're using CRB indexes. And volume on charts speak volumes about accumulation at bottoms and distribution at tops when you look at volume. And looking at fundamental analysis, this can tell you clues about the business's health. I really use the overall sector fundamentals to gauge health more so than specific companies in commodities. I look at cost curves, inventory, projected market balances, and supply demand. I do rely more heavily on technical analysis than fundamental analysis because I screen companies first using technical analysis. So when I do stock analysis, and that's why I'm going over the technical analysis and fundamental analysis, because I use both of these when screening stocks and doing my stock analysis. What I do is I tie it all together. I tie all of what I just proposed and what I did in this presentation, I tie it all together. If you tie it all together, I think this is the highest probability of winning, and especially winning big. You get the right timing. You get the right signals from the market. You see the patterns. You see the fundamentals. It increases your odds of success greatly because of all of the things that I'm tying together here. What am I doing? I'm looking at the real estate market. I'm tying inflation in there. That all rotates into ratios because it'll say, all right, I know that we're going to go into an expansion phase of real estate. That's where we're at right now. We're at an expansion phase of real estate. And with that expansion phase comes inflation. Then you look at, okay, I need to look at inflation. Can I verify that the inflation protected assets are cheap? Yes, I can through ratios. That's exactly what I did in this presentation. They are cheap in relationship to stocks. So if we're entering in an inflationary period and commodities are cheap, the money's already flowed out of them, I think that gives us a very large opportunity to make outsized returns given where we are in the real estate cycle, given where the ratios are at. So if you start tying this all together, what that does is it forces you to look at commodity type companies. The next step is to look at market balances. You want to look at the fundamental analysis of the sectors. When you look at those sectors and you're looking from sector to sector, you're saying, do we have a supply demand problem? If the answer is yes, you'll see deficits in the future. If the price is so low that you're under the cost curves, it just gives you that much more security and reduced risk when you purchase into these areas or sectors. And remember, always buy into strength. Do not buy into weakness. Weakness means that this thing's tanking, and that's when you pause. You pause and say, okay, I'm going to pause here. I'm going to wait for a bottom to show me that the bottom's in, and then wait for it to come up and buy into strength and see it move. Because if you're buying into weakness, it can continue to go down on you until you find a bottom. I like to see the bottom, then invest and buy into strength. That's my approach. That's how I do it. And I use technical analysis to do that. If you guys like that type of analysis, if you guys like this type of education, subscribe to the channel, give me a thumbs up, and I appreciate you guys listening. This is Finding Value.